Hello and welcome. In this lecture video, I'm going to be doing this bank reconciliation quick check problem on page 164 of your course pack, and then also talking about days sales uncollected on page 166, and then that will end our lecture videos for chapter 8, okay? So when we look at this problem on page 164, it says Brown Company's bank statement for September 30th showed a cash balance of $1,350, and the company's cash account in the general ledger showed $995 debit balance. The following information was available as of September 30th. A $125 debit memoranda is included with the bank statement and dealt with as customer's check for $100 marked non-sufficient funds, and then the bank charges $25 processing fee. B, the September 30th cash receipts, $1,250 were placed in the night depository after banking hours, okay, and did not appear on the bank statement. C, a $15 debit memorandum for checks printed by the September 30th bank was included with the canceled checks. D, outstanding checks amounted to $1,145. E, a customer's note for $900 was collected by the bank, and then a collection fee of $25 was deducted. And then F, included with the canceled checks was a check for $275 drawn on another company, Brown. And then part 1, prepare a reconciliation, and then part 2, do any necessary adjusting journal entries, okay? So I'm going to look over here, and I'm going to go onto this new page. And if you look back on page 161, what you might want to do is get those steps on page 161 of your course pack that talk about the steps in bank reconciliation. So I'm going to be talking about those as I go through, okay? So it says step 1, identify the bank statement balance in the cash account. So it says right over here, a bank statement cash balance $1,350. So I'm going to do 2 columns, okay? I'm going to write up here, this is our bank statement, and then this is our book balance. Do it like this. It says step 1 on page 161, look at your bank statement balance. And that is our $1,350. So I'll write bank statement balance $1,350. Okay. And then step 2, it says identify and list any unrecorded deposits and bank errors. So we look at our unrecorded deposits. So it says right over here, this is an unrecorded deposit right there. We were placed in the end, we're not included on our bank statement. And then we also have this right over here. Included with the canceled checks was a check drawn on another company. So that is an error. That's an error. Okay, that is an error. So we come over here, we say add. We can say our deposits in transit, which we see as our 1,250, and then also our bank error, because remember, we're Brown Company without the E, and just drawn on another company, Brown. So the bank made an error. It took cash away from us, but it should have taken cash away from this company with an E. We don't have an E. So that was a bank error. That's $275. And then we can add that to our $1,350. That should give us our $2,875 right there. And then what we do is we look at part 3 on page 161 and identify and list any outstanding checks and bank errors that overstate the bank balance and deduct those. So look through here, and then we do see we have some outstanding checks for $1,145 right over here. We don't have any bank errors that overstate our bank balance, so it's just those outstanding checks. So we can say deduct outstanding checks, $1,145, and then we can say our reconciled balance, our $2,875 plus our $1,145, $1,730. Okay. So then what we do is now that then this, if we relate this, what I just did, back to the steps on page 161, I just did step 4, which is compute the adjusted bank balance. So now I'm looking at step 5, identify the company's balance in cash, and that is from our book balance, which shows it right there, $995. So you can write over here, book balance in cash, $995. Okay. And then looking back on page 161, identify and list any unrecorded credit memoranda from the bank. So a bank collected a note receivable or any interest earned, for example. And we do have one of those. It says so right over here. We collected our note receivable. Okay. So the bank collected on a note receivable right over here. $900 was collected by the bank, and then a collection fee was deducted. Okay, so the bank is telling us that they did that for us. So we can say, come over here and add proceeds of note less collection fee, which is $875. And again, how did I get that $875? It's the 900 minus that 25, $875. Okay? And then we can say over here, deduct. Okay, so we did. We're looking now at part 7 on page 162, and we're going to identify and list any unrecorded debit memorandum, so check printing fees and non-sufficient funds, for example. Okay, so we look over here, and we do have this check printing fee right there. And then we do have a non-sufficient funds right there. Okay? So we deduct our NSF, non-sufficient funds check, plus the fee, which is our $125. And we also deduct our bank service charge of $15. And come back over here and let me redo that. Gives us our $1,870. So I took my $995 plus my $875 here, $1,870. And then what I can have is I can then take my $1,870 minus my $125 minus my $15, gives me my reconciled balance equal to $1,730. And so that, what we just did was step 8. And then step 9 on page 162 would be to make sure that these are the same dollar amounts, and then they sure are. And then the next thing that we have to do is do some journal entries to get the balance in cash, which is $995, to $1,730. So we have to do journal entries for this addition to cash, and then these subtractions to cash, okay? So let's look at that one. So the first one is, we had our proceeds of our note receivable that our bank collected for us, less the fee. So we're going to debit cash. And I'll put A here, and then I'll say A, and make sure we know what's what. So we're debit cash for our $875, because remember the note receivable was for $900, but we only get $875 cash because the bank charges a fee. So we're going to debit an expense called collection expense for that $25, and then we credit our notes receivable for $900. Now I can look at part B. I have my non-sufficient funds, so I'm going to debit accounts receivable for the original receivable, right, plus the fee. So if we look back over here, we had, his customer's check was for $100, so we had an accounts receivable for $100, right? And so what we did is we debited cash, credited accounts receivable, and then the bank said, no, the check did not clear because the customer didn't have enough money. Now what we actually have to do is now reinstate that accounts receivable, but we also, not just for 100, but for 125, because we're going to go back to the customer and say, you also owe us this non-sufficient funds processing fee. So we debit accounts receivable for 125, and then we credit cash for our 125 right over here. And then C, the last one, what we have is our service charge for our bank service charge, check printing fees, debit service charge expense for our 15, and then we credit cash for our 15. Okay? All right. Okay, so what I did is I took those journal entries, and then I also took the beginning balance in cash, and I did a T account here for cash. Here's our beginning balance in cash. Remember, we had our 875 right over here, and then we had our credit to cash here, and then our credit to cash there. The 995 plus the 875 minus the 125 minus the 15 gives us the 1730, and this is the amount now in the general ledger. Okay? All right, so now let's look at our final page here of Chapter 8, which is talking about our days sales uncollected. So this is a measure of how quickly our company converts its accounts receivable into cash. And this is important, right? Because we want to make sure that we collect on our accounts receivable quickly. Days sales uncollected. So the way we calculate that, we can see that here right in our figure, is we take our accounts receivable divided by our net sales times 365. So our days sales uncollected is represented in terms of days. Okay? And so if we look at this example, we say the following account balances are taken from our Mesky Sports at December 31st. Calculate the number of the days of sale for each year's, and then is the company's collection of the receivables improving or not, and justify it. So we can see over here with 2011 accounts receivable is 180,230, net sales 1,600,750. In 2010, accounts receivable is $280,450, and net sales is $1,457,600. Use this formula. I want you to pause the lecture video and use this formula to calculate days sales uncollected for each year, and then tell me whether or not you think their collection efforts are improving, and tell me why. So pause the lecture video, do this, and then we'll come back and check it together, okay? Okay, hello and welcome back. So you can see in 2010, we have our 70.2 days, and 2011, 41.1 days. And so yes, their collection efforts are improving by quite a bit. There are 29.1 fewer days to collect on their accounts receivable. And that's a good thing, right? You want to collect on your accounts receivable as soon as possible because, again, you can't pay your employees in accounts receivable. You have to pay them in cash. So you need to collect on those accounts receivable as soon as possible, okay? So yes, they are improving because the number of days is going down. All right? Thank you so much. Take care.